Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the euro currency. So yesterday market was a bit quiet due to the celebration of the Independence Day in the United States. But today the activity is promising to return. So today's talk will be on the euro currency because market stands right now at the level that we have specified previously, approximately a couple of weeks ago. After the Brexit has happened, we said probably market will show some upward retracement as the tensions is just calmed a bit, and market probably should take some relief. So that has happened. And the reason why today we will talk on the euro currency stands with the pattern that really has the large significant chances to appear, and it really could give us direction for a significant action. That's why we will take a look at the euro currency today. But in the beginning of the research, guys, I would like to return back to discussion of the New Zealand dollar. So if you remember, we have talked about the possible hand and shoulders pattern on the follow item from chart that probably should trigger downward action. Currently, as you can see, on the thin market yesterday, New Zealand dollar has shown a bit higher action that we have anticipated initially, although this action hasn't broken the overall setup on the weekly chart. So the major patterns that we have discussed and that stands in the background of this trade is still valid. This is the strong resistance on the weekly chart and the ABCD pattern on the weekly chart. But unfortunately, we can't rely anymore on these hand and shoulders that we have discussed because market really skewed the shape of this pattern. So right shoulder is too significant and almost equals the head. That's why currently we will not we do not deny the idea of the possible downward action, but probably we will need to get some other pattern to be formed that will be that should become the pattern that could let us to take the short position. Unfortunately, the hand shoulders pattern has not been completed correctly, and it couldn't be anymore the pattern that we will rely on for taking the short position. So speaking on the Great British Pound and Canadian dollar, so there everything is okay. So on the Great British Pound, the situation that we have discussed in the pattern, the butterfly pattern that we have talked about in the weekly research is still valid, and market is moving with it. On the Canadian dollar as well, as downward action still stands. So we will see what will happen. But now let's talk on euro currency. On euro currency, guys, market has completed the retracement that we have discussed. So this is the 50% resistance. So this is thrust down. You know that the euro currency likes the 50% levels. Also take a look. This is the monthly pivot point. This has been tested. And this is long-term channel to the upside. Market has retested this broken border. So this has been broken. Market right now has moved higher and retest this trend line. The most interesting here, guys, is the appearing of this potential bearish grabber pattern. If this pattern will be confirmed by the close price, so if market will close here or at any level that will stand below this red line, this will give us the confirmed bearish stop grabber, and the target of this grabber will stand to these lows. So it will mean that this pattern really could push market in a direction that we have anticipated. So when this Brexit plunge has happened, we said, well, guys, we should take a look at this A, B, C top pattern, and market by this single leg has completed 100% extension right at the fib level. So that has become the agreement by the Judd Napoli term. This was significant support, and market has started to move up right from this area. Now, there's really significant chances that this retracement will be over in a few hours till the end of the current session. And if this will be really true, it could mean that market could continue to move lower. Although the target of this grabber stands just at these lows, we should recall our talk on this ABCD pattern. The features of the ABCD, when it shows very fast CD lag and comes to some significant target, tells that usually when the market shows this such sort of reaction, the market just with the one candle reaches the 100% extension AB equals CD pattern, usually it continue move down to the next destination point. And as we have discussed overall setup on the euro currency in the research in last week, we said that the next destination point will be approximately around 105 or 106 area, close to the former lows around 105. This will be next destination point, because we think that in a long-term perspective, euro stands on the road to the parity. This really could happen. So that's why, as you can see, the importance of this grabber, not just with the taking out of these lows, but it could become the pattern that will trigger the action to the next target. And the next target will stand approximately 106, and this is 500 pips to the downside. So this is really very great potential. Another attractive side of this pattern is that based on this pattern, we know where to place stop. The stop should be placed slightly higher than the top of this pattern as soon as it will be completed. I mean, it will be confirmed by the close price. So on the intraday charts on the forward time frame chart here, guys, by the way, you see this retracement right at the 50% level. So market has completed once, drop, and gradual action. So this is definitely not the reversal. You can see the shape of this action is very choppy. So overlapping candles, so long tails here up and down. So this is definitely a retracement. This market has tested this area, moved down. It's also natural support resistance area. So it's very good chances for a possible taking the short position here with a possible downward action. But be careful with the grabbers. So you need to get it completed, or at least if you will take the position inside of the session, wait and see whether it will be completed or not. Because if we will not get the grabber by the end of this trading session, market will close above this area, we should not go short. That is the most important moment here. On the 30-minute chart, we see the pattern that could become the triggered one, and that could trigger downward action, downward reversal. This pattern, as you can see, is the butterfly cell that's forming right around the 50% resistance. So you can see chances that this pattern could work and market will continue to move lower still exist. At least currently, I do not see something really bad with this setup, this opportunity. And we think that's really maybe a really interesting tactical setup that potentially, even based on the grabber, it has not bad potential. So approximately the 200 pips, even more. But taking on the broader picture, why we are usually preparing the long-term views, long-term researches, just to see where a market in the big picture. And as we know, and as we expect the moving to the next target after 109, it should be 106, 105. It will be quite another story with this pattern. So it's really very interesting in this medium-term perspective as well. So let's see what we will get. And this is really not bad step. Let's see how it will turn